Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal and with me is Mansi Dave. And Mansi, what a day today. I mean, it started on a great note where Sensex surged more than 1%, tracking or mirroring the broader global indices. But then, look at the closing, almost close to 25,000 mark.
I know, Kavita, certainly. Good afternoon. It was a great start for the market, as we clearly did see. The markets did start really well. We did see levels of around 25,200 and even ahead of it, 25,250 in the first half, at least at till 1 p.m. also the levels were on these signs are giving good positive momentum in Nifty as well as Bank Nifty. So clearly benchmarks as well as the broader markets were doing really good. But around 1:30 we did see a dent, and then there was a profit booking street which was witnessed in the market, particularly Nifty and Bank Nifty. And while we were closing, talking levels around 25,000 to be precise, nearing 25,000 it is where Nifty did close, and Bank Nifty did show signs of 400 points of gains while it was closing 56,461. But if you see the levels on the upside, it was a profit booking phase on both the benchmarks as well as the broader markets. Not to worry, we did see that the sector specific momentum in the markets was intact, where all the sectors barring the media sector were doing really good. The broader markets were doing good, and if we talk about the major contributors during the session, clearly stocks like Kotak Mahindra Bank, HDFC Bank, ICICI, L&T, Adani Ports were the major movers. They were doing good in the trades, and the laggards, the draggers for the day, were ONGC, Reliance, Power Grid, NTPC, HCL Technologies. Talking sector-wise, the market was doing really well in the first half, and the situation was the same. The picture was the same in the second half as well. PSU Bank, Nifty Metal Index, Financial Services, Banks and Financials, Auto, Energy, FMCG, Pharma, Realty. In this order, the sectors were also performing. So good momentum we did see, but in the second half and the last 2 hours of the trade were given to the profit booking.
Absolutely. And, not only this, the combined market capitalization of all listed companies on the BSE, if you just note down the figure, it jumped from 4.43 lakh crores, reaching 2.25 lakh crores. So initially it was a great session. But then, let's start preparing you for tomorrow's session now. Let's get on board our guest for the day, Vikas Jain, Head of Research, Reliance Securities. Vikas, hi. Afternoon and welcome to Your Trades. And now it's your responsibility to, sort of get our viewers ready for tomorrow's trade. But having said that, let's do a recap of today's session, and now what are the important levels, in fact testing levels as far as Nifty is concerned or Bank Nifty is concerned.
So if you look at Nifty scaled at new calendar high of 2020, 25,300 odd levels. So some bout of profit booking was been due after sealing a calendar year high. And as we were witnessing the volatility with respect to rollover movement being the monthly expiry for Sensex in today's trade and the rollover individual stocks. So some bout of volatility was been through. But the markets have been holding the 20-day averages, the supports have been intact, and we have closed convincingly above 25,000 levels. So the outlook remains positive. So 24,850, 24,880, which is the 20-day average, would act as a trend reversal point. So if that is given through, then the market should send some amount of peak. On the higher side, first bout of resistance would be at 25,320 or which is the today's high. And we remain positive with targets of 25,500 levels over the next 1 week.
Tone is still positive. 25,500 is a hopeful level to watch out for in Nifty. Vikas, good afternoon. Mansi this side. Yes, index-wise, the market and the undertone is bullish, but talking sectors and stocks, we did see a lot of opportunity as we got during the session today as well. What are the stocks and sectors on your radar?
So on individual stocks, if you look at Varun Beverages, the stock was a strong outperformer in calendar year 2024. Since last 6 months, it has completely corrected and witnessed strong amount of correction. It's holding its long-term monthly averages near to 430, 450 odd levels. So we believe the stock is poised for a strong pullback on the higher side. So we'd like to recommend Varun Beverages on the long side with a stop of around 431 and a target of 540 over the next 3 to 4 weeks. And the second stock we like is ILDA. So with the infrastructure financing coming news flow positive, the last week, the ILDA stock has witnessed some amount of volatility. The stock has also been included into F&O basket, so which witnessed some amount of upmove. So we believe ILD would be positive with a strong buy, the target of around 180 and a stop of 155.
So Vikas, you're recommending a buy call in VBL, stop loss 431 and target is 540. And again, a buy call in IREDA with stop loss 155, target 180. With that, thank you so much, Vikas, for being on the show and
Thank you.
giving out these strategies for our viewers. But then time to move on. And what about the market? You really want to understand and deep dive into the market and the way you should be trading. Let's hear the word from the wise.
We are seeing opportunity in the overall carbon neutrality and climate change. Even now, we are seeing opportunity in select pharma companies. We are seeing opportunity in select smaller banks, NBFCs. But whether they are 10 bagger, 20 bagger, I'm not sure.
Capital market is very, I would say, at least to me, it looks like very smoothly compounding and scaling as the GDP of the country grows and the entire system remains intact. So the capital market opportunity still is a pretty large opportunity. And now markets have valued it also somewhat. When we talked about 3 years back, I think valuations were very cheap. Now I think people are realizing that, and it is showing up in the valuation. The real estate looks to be real estate, defense, energy transitions, capital market. I mean, these are a few things which are coming immediately to my mind. They will grow at more like 20, 22%, 25%, even banking.
I mean, I still feel on the margin, banks look a little better, utilities look a little better, the consumer discretionary looks all right to me. Pharmaceuticals based on individual companies is promising. And what we are underweight is basically consumer staples and large IT. Some themes will grow faster, of course. I mean, Make in India is a very powerful theme, and defense is, of course, a very powerful theme. So these themes will definitely grow. Digital businesses is a very powerful theme. They will continue to outpace the GDP growth by a wide margin.
Power is the theme. Okay, power remains buy on dips. It's a decadal opportunity. So if next 5 years, I think by 2032, I think power stocks should do well. All energy baskets should do very well. Then I will more bullish on the India infrastructure space. Okay, not just EPC companies, large infra plays. Okay, whether it ports, airports, even you can say EPC company also. Large infra names which should be a biggest beneficiary, because we have seen irrespective of state government also, the infra spending has not cut down. I think we are in a massive investment phase in India. So that's a space which we like. And obviously if infra does well, then logically materials should also follow. Okay, so I'm saying first infra followed by thing. And consumption as a theme is also coming back. I think the tax benefit which government has given, the RBI recent cuts also, hospitality space we still like, whether they talk about hotels, hospitals, okay. So those are the areas, services industry also.
Let me give you a few that I picked up. ESAF, Small Finance, SAT Industries, Imagica World, Morpon Labs. Those are companies that look quite interesting now. We talk about defense, Paris Defense and Space, and Trumali Chemicals. Those are some that look quite interesting. And if you look at the breakouts, Swiggy is one, Aban Offshore, GRM Overseas. These are some other companies that look interesting. So there's quite a long list that we can come up with that look good.
So that was Madhu Kela, Ramdev Agrawal, Prashant Jain, Sandeep Tandon and Mark Mobius, the vice giving their advice so that you can draw and draft your portfolio for long term. Moving ahead, let's talk stocks, and KPIT Technology was on our focus radar because of the downturn it did show during the session today. While closing around 6% of dent, which was seen 1306 were the levels at which KPIT Technology closed. The stock took a nosedive on murky demand environment and slower than expected deal closures. The company is banking on its latest acquisition to steady the ship. Varun joins with more details and what the street is penciling in. Varun, over to you.
Well, so the stock of KPIT Tech is down in today's trade by around 4 to 5%. The reason is the mid-quarter update that the company has given. Now, the quarter update says that the overall deal pipeline in the European business is strong, but in the US and Asia, the outlook remains actually weak and uncertain. Also, the deal conversion timelines, that remains a little big elongated and also much slower than expected. The revenue conversion from closed deal have progressed at a lower pace than what was earlier expected. Also, the company says that they expect the cash of acquisition to close by the quarter end, and they anticipate the deal completion will actually contribute 4% growth to FY26 versus FY25. Now, Kotak has a sell on this stock with a price target of 1,000 rupees. They have actually cut their FY26 to 28 earnings estimate by around 3 to 4% and also trimmed down their FY26 organic revenue growth to 7% versus 9% earlier. They do not bake in the revenue contribution from case of acquisition because they are waiting the overall closure of this deal, and also they have moderated the EBITDA margin estimate by around 30 basis points from FY26 to FY28. They say that the overall deal pipeline is strong, but the decision-making delays actually is impacting the overall bookings for this company. Also, the demand trends are weak and there is limited recovery expected in FY26, and hence they have actually cut their overall earnings estimate. So it's an earnings estimate cut by Kotak and also the overall muted mid-quarter update by KPIT Tech that has resulted in the fall of stock price in KPIT Tech in today's trading session.
All right, so that was a mid-quarter update from KPIT Tech. But then Nilesh Shah, MD CEO Envision Capital, says that the growth potential for large-cap IT is players under limited under the current circumstances. Now, however, he also says that pockets of opportunity are present in the mid-cap space. What exactly is he talking about over here? Let's listen in.
The large cap IT is basically just been growing in about single digit. I believe that for a growth market like India, where we have so many other growth options, unless you are essentially hugging the benchmark or want just basically the basic kind of large cap market returns, honestly, I think as a bottom-up investor, you probably don't have a compelling reason to be in large cap ITs. It might be a good place to hide when there's enough correction, and these are anyway very capital efficient companies and strong on governance as well. If the US economy were to get challenged, global economy were to get challenged, even trying to kind of grow in high single digit could be a huge challenge for the big IT companies. Of course, pockets remain in the mid-cap, small-cap IT space, where they are specializing in specific domains. Those kind of opportunities can remain. But otherwise, the big IT companies, the best is behind them.
So that was Nilesh Shah with lesser conviction on the IT sector, but mid-cap IT plays are still doing the talk. So moving ahead, let us now take a look at all the stock-specific action which were doing rounds on the exchanges. Ravinder joins us with all the details.
Well, Ambuja Cement is in focus. The company has successfully commissioned the 2.4 million ton per annum brownfield expansion project of the cement unit in West Bengal. And with the commissioning of this cement unit, Ambuja Cement capacity has increased to 102.95 MTPA. Apart from this, on back of brokerage note, Jindal Steel and Power is also in focus, where Nuvama has come out with a note, and they have maintained the buy rating with target price of rupees 1,193. They say that the stock correction amid seasonal weakness provide an opportunity, and they argue the company's earnings will stand out over peers between FY25 to 27. Moving to next, delivery is also in focus, where company has announced that the delivery boost capacity with gateway hub expansion, and JM Financial has also come out with their note, and they have maintained their buy rating, high target price of rupees 480 as compared to earlier target price of rupees 380. Apart from this, TVS Motor is also in focus, where company has announced the launch of all the new TVS HLX 155G in the Republic of Congo. So back of this, TVS Motor is also in focus. And lastly, on back of brokerage note, Titagarh Rail System is also in focus, where Antique has come out with a note, and they have maintained their buy rating with target price of rupees 1,099. This is that the company is gearing up for the growth and has made a strong entry into the passenger rail system, which is at inflection point and expected to be a dominant revenue contributor in the medium term. So back of this, Titagarh Rail is also in focus.
Right, Ravinder, thank you so much. That was a roundup as far as stocks news is concerned. But then what about cues for tomorrow? Let's get into that. First up, global cues. Fed chair testimony on easing policies. That will be in focus. Also global earnings, where we have Micron, General Mills and Jeffries names coming in. News coming in from fundraising. The focus in the company focus would be CEAT and Canfin Homes. As far as TradeX dividend is concerned, Aegis Logistics will be expecting an announcement over there, but then IPOs opening tomorrow would be Subhub Steel Tubes and HDB Financial, which will be in focus on the channel as well, but then a couple of IPO listings which will be in focus, that is Eris Infra IPO. So all this and more on radar tomorrow as far as Qs are concerned.
Okay, so all of these important cues, events and economic indicative action which you need to keep a radar on. State Bank of India is seeking to raise its equity stake in SBI General Insurance by 5% to 75%. Sources inform ET Now. Warburg Pincus is selling 10% of its holding in the insurer to SBI and Premji Invest, which is also buying another 5% from the PE investor. Anurag Shah joins in with more details on this.
State Bank of India is increasing stake in General Insurance subsidiary SBI General Insurance by 5%. Presently, SBI holds around 70% stake in SBI General, and after additional 5%, bank stake would be at 75%. Premji Invest is also acquiring additional 5% stake. So, private equity firm Warburg Pincus is selling 10% stake, and which is getting acquired by Premji Invest and SBI 5% each. As per our sources, valuation of SBI General is at 35,000 crore. So, SBI would be paying around 1750 crore for additional 5% stake. If we talk about the gross return premium, then in FY25, the SBI General Insurance has seen a growth of 11% in a gross return premium. Company holds around 4.3% market share in non-life space, and there is a plan of public listing also. As per our sources, by FY27 there is a plan to list SBI General Insurance. So one more development in a general insurance space where SBI only acquiring additional stake in their subsidiary SBI General Insurance.
All right, and with that, it's a wrap on your trades as well. Time to sign off from Kavita and Mansi, but then you stay tuned on ET Now. Thank you so much for watching.